Hello, ladies and gentlemen. This is your teacher Usman Ali, and we are going to solve the problem 5.7, which is again the preparation of a cash flow statement. So the numerical of this problem 5.7 is almost same uh, as compared to our previous numerical of problem 5.6. The only difference is that in problem 5.6 we had a gain on sale of investment, and if you see here the company is having a loss, okay, of $5,000 from the sale of investment. So we will learn how to adjust the if you had a loss actually also, okay, not loss from the business operations, the loss from the sale of investments or the non-operating part actually, okay. So the 2013 balance sheet is given to us, and along with that some additional information related to 2014 is given to us, and we are required to prepare the cash flow statement for the year 2014. So I have shifted the numerical into the Excel sheet here, just to have a view of solution and question both. We start with the name of the company, the cash flow statement, and for the year we are preparing the cash flow statement, and then as we are preparing an indirect format of a cash flow statement. So it starts with the figure of net income, which is given to us actually. Now if you see here the net income figure, the net income for the year 2014 was $35,000. So we will write here that we had an income of $35,000. Okay, now we have to adjust this income for any changes in working capital and any changes like non-cash expenses or gain and losses like other adjustments. Okay, so first, changes in working capital, again current assets and current liabilities. So in current asset we have cash, we do not use cash, you know the reason. Then we have another current asset by the name of account receivable, and it was 21,200 at the end of the last year. And now if you come to this point number 7, as of December 31st 2014, cash it was 70,200. Right now we don't need it. So account receivable at the end of this year is $42,000. Okay, it was 21,200 and now it is 42,000. So we can say that account receivable has increased. Increase in asset is cash outflow. The question is how much cash outflow for that. 42,000 minus 21,200, so we will get a change of 20,800. So it means that there is an increase in account receivable experienced. An increase in account receivable or increase in asset is a cash outflow, so we will write minus. How much increase is there? 20,800. Okay, so this is my increase in account receivable. Then let's proceed. Let's see if we have some more current assets. So we do not have any current assets remaining because investments are long-term investments. Okay, so current assets are done. The next part is current liability. We have account payable and then bond payable. So bond payable is a long-term liability, so the only current liability given to us is account payable, $30,000. Now if you see here in the seventh sentence, account payable was $40,000 when this year finished. So it was 30,000, now it is 40,000. So account payable has increased also. So I will write here increase in account payable. Okay, increase in liability means cash is coming in. How much cash is coming in? That's $10,000, so it will be a cash inflow. Okay, after this we do not have any other current liability left, so the working capital portion is done. Then the third part in the operating activity section is if we need to adjust any non-cash expenses or gain or losses if there are any. So inside non-cash expenses we have depreciation expense, we have amortization expense, and we have the natural resources or depletion expense as well. Now in the numerical given to us, amortization, depletion is not given, only depreciation is given. If you come to point number 5, we have a depreciation expense of $12,000, so I will write it here. Okay, depreciation expense, and depreciation expense was such an expense which was subtracted inside the income statement Now there was no money involved, means no money will be paid or is paid, because depreciation is a non-cash transaction. So if I want to reverse that expense entry which I did in the income statement, what I will do, I will reverse it by adding it back, because it was subtracted when I prepared the income statement. So it will be 12,000 plus depreciation expense. After that, we will see if we have any gain and losses. So if we come to the information number 1, Arrow liquidated its available for sale investment portfolio at a loss of $5,000. So the investment portfolio of the Arrow company was $32,000. The management of this company decided to sell all of it. When they sold it, they did not receive $32,000. Unfortunately, they received less than that. How much less? $5,000 less. So 32,000 minus 5,000, they actually received $27,000. Okay, from the sale of this investment, which costed them 32. So $5,000 is a loss for them. Now, in order to explain the thing, I have created once again a fake income statement. So this income statement and the data which you see here is not related to the example which I'm solving. No, except the blue color 5,000. I just wanted to explain the role of the 5,000 in the income statement. That's why. Okay, so we have the operating portion, which I will color it, let's say green, and we have the non-operating portion as well. Okay, so the non-operating portion is yellow plus the blue color also. Okay, and these figures which you see here, let me make it something orange type. Okay, yeah, not an orange, but it's good. So the color which you see here, probably it's kind of brown orange mix maybe. So the color which you see here, this is all fake data. I just wanted to explain 5,000. Okay, so we had the sales minus cost of goods sold is equal to gross profit minus other expenses, and we got our operating income 45,000. Now we had a loss on the sale of investment portfolio $5,000, so obviously it will decrease my income. It makes sense. Okay, which means that this income which is available here, $35,000, this is already after the subtraction of 5,000. After the subtraction of 5,000, okay, means 5,000 is already subtracted. Remember this thing. Now, what is this 5,000? Is it operating? No, it's not operating. It's a non-operating loss. Okay, non-operating kind of revenue kind of transaction. So it's not a revenue, it's kind of an expense loss. Okay, so if I am preparing operating activity section of a cash flow statement, so I need to write here income 35,000, that income which is related to operations, let's say. Okay, so it means this $5,000 is not related to the operations and it was already subtracted. If I want to adjust this thing, all which is already subtracted, it means this adjustment will be in reversing it, which is if it was subtracted, then I will plus it back. Okay, so I will plus this 5,000 here. The question could come into your mind that then, sir, interest expense is also non-operating. Why are we not adjusting it here? Or what about the tax and others? We are not doing it because remember that this color I told you, this brown orange kind of mixed color, that this is fake data. It's not given to us in the numerical. If information on interest and other non-operating expense and revenue was given, we would have written it here. Right now nothing is given, only 5,000 is given. We are only adjusting 5,000 here. Okay, and what is this? This is loss from sales of investment portfolio. Okay, loss from sale of investment portfolio 5,000 plus. I hope you got the reason why plus, because it was already subtracted and I want to adjust it, so I need to reverse it. Reversal of minus is plus. Okay, so that's it. Now we are done with it. So let's calculate the net cash flows then. The net cash flow from operating activity will be 41,200. So that's net cash flow from operating activities. Our next section of the cash flow statement is the investing activities. Okay, so inside investing activities, current assets, non-current assets come. Now, the first transaction is related to the liquidation. The event is related to the liquidation of the investment portfolio, which was worth $32,000. This is a long-lived asset, so it is related here. Okay, we had made sales, so I will write here sales of investment portfolio. Now, although the worth of this portfolio was $32,000, but we sold it at a lesser value. How much less? 5,000 less. So if I subtract 5,000 from 32,000, so I will receive, or the remainder would be $27,000. It means that when I sold the portfolio whose worth was $32,000, by selling it, I received 27,000 only. Okay, that's number one. Then number two, a tract of land was purchased on 38,000. Land is a non-current asset, so obviously it is related to investing activities. Okay, and land purchased, money was paid. How much money was paid? $8,000. Now 38,000 was paid, so it is a cash outflow. It will go to minus. After this, information on common stock is given. Common stock is related to the equity section, and that's financing activity, so we don't record it here. So I will conclude the net cash flows. Okay, net cash flow from investing activities is minus 11,000. Then let's move to the third section of the cash flow statement, which is financing activities. So if I go to the event number or information number 3, an additional $30,000 in common stock was issued at par. Issued at par means sold at par. When you are selling common stock, you can say that I am receiving money from the investors. Receiving money means cash inflow. How much money is coming? $30,000 is coming in, so cash inflow, which is positive. Why? Because you issued common stock, or you can write here increase in common stock. Okay, then number 4, dividend totaling $10,000 were declared and paid. So dividend is actually paid here. How much dividend is paid? $10,000. So if the money is paid, this is a cash outflow. Then number 5, net income $35,000. It is already adjusted here or recorded here, shifted here, and along with that $12,000 depreciation expense, we already are done with the depreciation also. So number 5 is done already. Number 6, land was purchased through the issuance of $30,000 in additional bonds. Now we had purchased land and no money was paid. In return of that land purchase, bonds were given. So if you see here, it is a non-cash transaction. Though we have purchased the land, but we did not pay any money, we just handed over the bond to them. So it's a non-cash transaction. If it is a non-cash transaction, it has no concern with the cash flow statement. Okay. Further, we have this cash information, which we don't need right now. We can wait a bit. Okay. Account receivable is already done. Account payable information is already done. So that's it. We are done with our financing activities also. Okay. And our net cash flow from financing activities is $20,000 positive. This is our net cash flow. So we have all the 3 net cash flows. We are good to calculate the net cash flow during the year, means like during this from the start of the 2014 till the end of 2014, how much net cash is generated. Okay, so it would be the addition of net cash flow from operating activities, net cash flow from investing activities, and net cash flow from financing activities. So actually it will be from financing activities. So actually it will be 41,200 minus 11,000 plus 20,000. So during this 2014 year, in these 12 months, net cash generated was $50,200. Now obviously we started this year with a beginning value also. And at the beginning of this 2014, which was the ending of 13, we had a cash balance of $20,000 here. So I will write here $20,000 the beginning balance, which means that in total I have $70,200 right now with me cash. Out of that, 20 was already available. 50,200 I generated this money, this cash, net cash, during the what you say the days of 2014. So if you see this 70,200, this is also the same balance given to us as of December 31st 2014. So this was the solution of the the problem 5-7, not the exercise, problem 5-7. I hope you got the point. Thank you very much, ladies and gentlemen. Stay safe.